Is it uptrend or a downtrend? Is it that you type or you voice out? Is it uptrend or a downtrend? Okay, type it. Uptrend. Good.
It's up there.
Okay, this is an uptrend. See, it's an uptrend. No doubts. No need any place to prophesy. I give you this an uptrend. That is what good is showing. Now, for you to believe that it's an uptrend, the direction is not enough. But the direction I've already given us that is very, very important to focus on buying than selling. That's what the direction is saying. It gives direction. Now, for us to believe this markets, we need to go to the second step, which is the structure. The structure of the market. The direction is different from the structure. But it's the structure that gives direction. Now, if you want to look at the structure, I said is that you use 1 hour or 4 hours for the structure. 1 hour or 4 hours. It all depends on the market sentiment. Now, what traders did you see? There is no specific time frame for structure. Let me say that again. There is no specific time frame for structure. Some people believe that it's only 4 hours that we use for structure. If you are using only 4 hours, good for you. Some people believe it's just 1 hour for structure. Good for you. But for me, I believe the structure depends on the market sentiments. Market sentiments matter to me where the market sentiment, which means how the market is moving. If you go to your 1 hour time frame, for me, the way gold is moving from 1 hour time frame, it's like there's no much corresponding about the market. Will you call this a break of structure? Will you call this a break of structure? For what you are saying, is this a valid break of structure? It's not all break of structure that is big. That's why trading is not gambling. It's not all break of structure that is break of structure. See, yes, no. This is a break of structure, but it's not valid. Yes, it's a break of structure, you're right. But this is not a valid break of structure. I thought the trading is all about probability. It's a break of structure, price break is structure. But this is not a valid one because trading is a game of probability. So there's no 100% assurance that price will go exactly the way we want probability. So as a trader, you only pay attention to high probability trade. That's what differentiates you from gambling. Because gambling is all about let me see opportunity and let me go in. But business is it a good place to buy? Why am I buying? Is this big of structure valid? How do I know that this particular structure is valid? This is a business message. You are trying to look at how confident you are to that market. You're trying to look at how confident you are to that market. Because trading is all about confidence. Oh. As long as you have confidence, you can never make money, even though you know what you are doing. As long as you have confidence, forget my guy, you need to make money for this game. You're not going to make 1 naira. Because I'm confident. Let me make you a trader. Because if not be confident, what you want to tell me? Market to be say, it go be like say they go up like this. Before you know, it go start to go down. So what you give you that confidence, the market will go down like that. Now what they call valid structure, probability. So this is a break of structure, but it's not valid. So if you look at what market is doing, it's like price give us like a market structure shift here. Now, and ever since then, we see like a break of structure here, according to what 1 hour is telling us. Oh. But the question is this market structure shift valid? That's why the structure in 1 hour is not clear to me. Because I don't try to just pick out a structure that I will analyze with 4 hours or 1 hour. I will try to understand the structure, maybe from 1 hour or 4 hours. So this 1 hour structure is kind of confusing for me. So what I'm going to do is very simple. I will go to my 4 hours. In my 4 hours now, let's look at the structure. According to what we have, look at the recent structure. Recent structure is this. You see a break of structure here to the upside. This is a break of structure. To the upside. We are trying to detect the real structure of the market because I told you the real structure determines the market sentiment. And if you look at what happened, we see that price give us a pullback and come back, sweep out this liquidity here, and come back to this other block below it and start buying from that other block. Yeah. Or you sweep it out and start buying from here. So what happened? Price continued going up, but wasn't able to break out from this high. And what we see next is price giving us a pullback, and a breakout from this low. This is a market structure shift. Market structure shift. Look at it. This structure is kind of meaningful. This kind of structure, it makes sense. And if you look at it, when price gives us a break of structure here, we see that this low was a protect low. Why? Because it swept liquidity before buying. This is liquidity. Some liquidity are here. It swept them out before you buy. So this low is a protect low, and this is valid break of structure. And that's why when price come back down, it was able to respect it. Why? Because that structure is valid. This is a protect low. I've told you, for you to have a valid order block or break of structure, there must be a protect low. This is a protect low, liquidity sweep. But the other one does not sweep liquidity. That's why this structure, if you look at it, we see an impulsive move. Why? Because liquidity was swept. Whenever liquidity was swept in the market, just know that that particular low is solid. And price will buy like say, it's no good. And what happened? Price to pound this liquidity as well and start buying. But despite the liquidity sweep, the buying momentum is not enough. So the buying momentum start to be exhaust. They don't break from this high. Could give us what? A market structure shift to the downside. It's a market structure shift. Now the question is this market structure shift valid? That's the question we need to ask ourselves. Is this a valid market structure shift? Yes or no? Oh yeah. Is this a valid market structure shift? Because it's not about having a market structure shift, but is that market structure shift valid? As I said,
Yes, sir.
yes. So why do you say it's valid?
Because the bearish candle closed with a full body.
Okay, because the bearish count is close to the full body. I love that. Is that the only reason why you say it's valid? Is that the only reason? Is that the only reason? For you to consider a valid market structure shift, you must consider four things. This is why my teaching is quite different because I'm a man of principle. Whatever I'm doing, I give you principle because it's not all market structure shit is valid. So that you can detect the one that is valid from the one that is not valid. A sweep liquidity. Where is the liquidity? Where is the liquidity? Oh, liquid that was swept. Where is it? Show me. You said a sweep liquidity. Where is the liquidity sweep? My mic is so low. Is my mic low? I'm not sure. I'm not sure. I'm not,
I can hear you.
I'm not sure. Log out and log in again. So, where is the liquidity sweep? Is that a liquidity sweep? A sweep the previous low. Where is the previous low? Where is the low now? Okay, this previous low. Okay, price sweep out this sweep. Is it what we are trying to say here? Okay, let's forget about what we are saying. Let's talk about how to know a value market structure shift. Number one, there must be a liquidity sweep. Any market structure shift that does not sweep liquidity is not valid. Any market structure shift that does not sweep liquidity is not valid. Now, this is a high, a swing high. Price does not sweep out this liquidity. And any price sweep out this liquidity, we'll have called this a valid one. This is liquidity, external rate liquidity. So an external liquidity must be swept for you to have a valid market structure shift. An external, not internal. External, external, outside. Now, if you look at the daily range of this market, this is the high of the market, and this is the low of the market. Here, here, initially. So when price come back here, it was buying, but wasn't able to break out from this high, the daily range. So had it been, it break it out or you sweep it out, this will have been an external range liquidity sweep. But they refused to sweep. That's the first sign that shows that this market structure shift is not valid, because the first sign we are looking for, liquidity sweep, is not there. The second thing, there must be an impulsive move. Though we have impulsive move, no doubt this is an impulsive move. It's an impulsive move. The third one, it must break a structure. It break a structure, which goes market structure shift. But the fourth one, it must continue. After making that structure, it must continue going down. After giving us a market structure shift, for it to know a market structure shift that is valid, the market must continue going down. Not just giving you a market structure shift and immediately start to go up. No. Suspect that market structure shift. Like this market structure shift now, I suspect them. Because one market break structure, it not even give seller space to sell more. It just started to buy immediately. So this market structure shift is like a liquidity sweep. For me, it's like a liquidity sweep. It's not valid because there's no liquidity sweep above it. Two, though you have a displacement, a break a structure, but it does not continue going down immediately. So, RDBT is a valid one. Price will have continued going down. That's why we did no market structure shift. It will continue to go down. It will continue. It will go up immediately after a break structure. Because this markets, if you look at it, don't they go up for a long time. You see, not be today gold don't they go up. It don't take we don't they go up. So for market to change, it not go easy. Make we not like give ourselves. It not go easy. Market don't they go up since 2025. Throughout last year, gold go up, gold no go down. Throughout last year, gold no just made down last year. Then just they go up. Now, you want tell me say gold, when you start to they go down now? No, now, haba. So why? Because it don't give us valid market structure shifts. So even though I don't read news, I don't see this thing for my candle. My candle don't interpret say this gold we want sell, so you know go sell for a long. Now buy, go buy later. I've looked at from the daily time frame, it's still showing what? A strong buying from the higher time frame. But see, trading a game of probability. I know they try to say good, no go sell, but for me, go get high probability of buying than selling. And the probability what they see. Gold fit sell. Eh? Market fit do anything you want. But as a trader, you got to know what it is. That's where your confidence lies. And what gives you those confidence is the principle, the laws. If you know the law, trading become easy. You know the one that is valid from the one that is not valid. That's why I left 1 hour, because I see 1 hour is not clear for me. So the 4 hours is very, very clear for me. So I prefer looking at gold on 4 hours rather than looking at gold in 1 hour. But some structure today, now 1 hour I would like make I look. Why? Because the structure clear for 1 hour. So there's no particular time frame for structure. It's either you use 1 hour or 4 hours, as long as the day trader is concerned. 1 hour, 4 hours. 1 hour, 4 hours. This is your goal. 1 hour, 4 hours. This is how it works for me. Now, wait till they work for me now, they teach you. Now, that's why I can take advantage of gold, because I believe this low is a protect low. Why? For me, I don't call this what? A break of structure. I call this a liquidity sweep. So my expectation towards gold is that gold might likely continue going up to the moon. That's my expectation to gold. My expectation to gold. And that's why I go to 5 minutes and I look for structures in 5 minutes. So instead of me, because as a trader, don't trade against the trend. It's very important. Don't try to always trade along with the trend. So I'm buying gold because gold is buying, not because gold is in downtrend. No, I'm trying to buy the pullback. No, I don't like pullback. I don't like pullback. I don't like making a trade against pullback. It's very bad. Now let's go to BTC. Why you should not trade against pullback is because of this BTC. If you are trading a pullback in BTC, you will collect loss. If you trade pullback for BTC, you will collect loss. So you want trade pullback. Like this market, they go up since now. Say you want trade pullback for this BTC or pullback. Now with this market, now whether I want to go 15 minutes or 5 minutes. Let me show you before we go deep into BTC. Say you want trade this pullback. Why is my likely do that? That this is a change of character. That this is a change of character. And this is a break of structure. And one or trade this pullback. Price might likely go. Maybe you take this as your order block or this. Yeah. As your order block. And price have not come back to it. I want to sell. Anything can happen. Though this low is protected, this high is protected. This high is protected high. But the problem is this is a pullback. A pullback is always a pullback. Price is buying, not selling. So if you are trading against the trend, price can go your way. It's possible for you to trade against the trend, but it's risky because price can just continue what's going on. Because price still the uptrend, not be downtrend. Price still the uptrend, not be downtrend. So trading against the trend, it be like, I don't know how to talk. It be like, I don't know. It's very bad. It's very bad. It's very bad. The only way I'm trading gold is because I understand what 4 hours is saying. And that's why I'm looking at for buying in gold. Now buy, I dey buy for gold. I know they say. But some people they say, but boss, you dey trade against trade for gold now. No. My 4 hours is showing me that buying, even though this market is selling, this selling does not have high probability. This selling not strong. Even though good they say, the selling not strong. Let me feel they buy. But if they say this selling strong, I no go sell. I go wait until price come back to my structure before I go sell. But if I want sell, I feel they sell based on structure for 5 minutes or 15 minutes. Like this gold now. I feel sell for me like this one now. This entry now. This entry here. Where you give us where the we first give us change of character here. This is change of character in gold. Yeah. You enter for a buy here. Price go your way. Yeah. Price come back again. You give you another break of structure. We dey expect another buy again. Somewhere around this zone. Here. If you look at it, buy there. Price sweep that. I don't do video concerning this one. Price sweep one out. It sweep this one out. And they come back to this loop and start to buy again. Now, I will still dey continue. And I don't get another setup again. I post them. There's a particular setup here. Other block A. I see maybe here is B and here is C. That which other block this thing price is going to respect. Price not come to any of them. Sell. And it start to dey buy. And if not me, I don't panic. Anytime the price not come my other block, I don't dey panic. I don't panic because me, I dey trade based on I want to be right all the time. And I want to trade it define that. Trading need perfection. So if price not come to any of this other block, I don't dey give any reaction. So even though price come and start to buy, it no concern me. Because see where I dey look to buy these 3 zones. No be here. So if you dey buy from them, no concern me. This is telling you you are a good trader. You are trading based on what you have seen. Not what you think, because price have come there, you think the market will start going up. No. That is emotional trading. Emotional trading. Like the kilos. Just see, say, make price come your other block. If you not come, leave am. Now, what will be your expectation? If you not come, don't buy, no sell. This is how you trade. Now, this market now, it just they go up, they go down. If you not come here, I know the answer. pass trading for you. You trade based on what you are seeing and your confirmation. So BTC, I get gold to the buy gold because the market structure shift no valid. But I not get mine to sell BTC. Despite the fact that we have a liquidity here, this is the last break of structure of the market here. This is the last break of structure before market start to change in your lower time frame. And that low is put, that high is protected. Why? Because price give us a liquidity sweep. A sweep liquidity, I started selling immediately. Market fit sell from there. But just know, see, this thing a game of probability. Anything will happen. Because you are trading against the trend. But if you trade along with the trend, you can do it. But let me see 1 hour. Let me see what 1 hour is doing. It's like 1 hour sweep liquidity. It's like 1 hour sweep liquidity. I feel say BTC because later they see for 1 hour now. While I'll be going up, I think BTC is more better in, is it 4 hours? I think it's more better in 4 hours than 1 hour. Is it 4 hours or 1 hour? This structure is more better in BTC. Okay, let's see. This is like a break of structure to the upside and price strip out all this liquidity. After sweeping it out, you start buying. Mm. If you in a 4 hours play person, not before 1 hour. And if you look at it, 4 hours, we see that here is a market structure sheet. Price come back, buy, pull back, and start buying here. Plus a break of structure. This is not valid one. Price sweep out every of them and started buying from here. So for me, I believe BTC is coming somewhere around this. So it's very risky for you to buy. According to the 4 hours time from now, it's telling me that BTC is coming in because it's sweep liquidity here. This low that they say, though is protected, but there's no valid other block here. That's why price was able to break out from this side very much. If you look at this one show where it break out, we see impossible move. But this one, no impossible move. The price was able to sweep out this low. Despite that this low is protected, price sweep it out. No, there's no valid other block here. You can't call this an other block. I've told you there must be a displacement when they come to other block. You can't call this an other block. There's no displacement. There's no displacement. You can't call any of these zone an other block. Any. You can call this an other block. Why? Because we see a displacement. I'm just saying. But there's no displacement here. Look at this one. A displacement. A displacement. Another block, you only see a displacement. Not without displacement. Like this one, there is no without. That's why price was able to break out from this low. Why? Because the structure is weak. Trading, anything is there. This structure where this is so weak die. Because for you to have a valid break of structure, number one, there must be a liquidity sweep. No doubt, you sweep liquidity. Number two, impulsive move. A lack impulsive move. There's no impulsive move here. Even self, now make I say BTC they say because here, look at that. There's no impulsive move that I show here. It's like a liquidity that was swept. You see, it be like liquidity sweep. So this break of structure we do now, not valid. Forget say a break structure. Now what they keep most traders this? Not valid. Why? Because it lack impulsive move. Even though it break out from this high, it lack impulsive move. Now, you sweep it out. After sweeping it out, you see, now nobody will tell you, here, this structure, you go valid. Why? What do they see? We just see waiting. Impulsive move. 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 So the impulsive move starts even from here and I start. Even for here and I start. Ship. Show. It show. So as you come back again, market fit just do something like this now. Come fill up this page now. Everybody go. What you go see next? Film. So instead of you, they think, say, one sell BTC. My guy, just they buy BTC, they go. Go to your 15 minutes, look for settle. Buy BTC again. As in the hot. I know see this low now for BTC now. This low is not protect. This low wey dey like this one for 15 minutes, e no dey potato. Make you know wetin dey do because I get set up now for BTC now. You can delete all these things. And make you understand these things, trading, see, wetin I dey operate with this thing na principle, na law. Once you don get law, trading become easy as ABC. Like this low no dey here now for BTC now. Despite the fact that I've seen that BTC is going up, so instead of what to be selling, we have to look for more buying opportunity because price never break out from this high. So your 15 minutes still there active. Go to your 15 minutes and continue buying. Now, in your 15 minutes, we see that this is like a big construction, but this is a liquidity sweep. This is a liquidity sweep for 15 minutes time frame. So if you guys this thing for here, other block for here, it no go work. So what you go do as a trader now? If you look here now, this is the last big construction according to 15 minutes time frame. Please let's pay attention. So price does not come back because we expect price to come back here, come back to this other block here before buy. That's our expectation. But price never do that. I just did follow the buy for 15. It clear for 15 minutes. So it clear. And now see it clear. 4 hours. Gold now they expect 5 minutes for me. And 4 hours now they use. BTC now, 4 hours and 15 minutes. Now, if you look at now, based on say here now liquidity now, this is a liquidity zone now. Here automatically I become a liquidity zone. This is a liquidity zone. And we have an order block here now. Here is another block. And we have an order block here. Here is another block. Here. And we still have a little order block here. Here. So which order block anticipate you expect? Because the market, I believe say you drop small. The market will drop small. Will drop small. But if you drop, it could drop come this area, and I here will buy. Which place where this market you expect? Is it A? Let me write it down. A, B, or C? A, B, C, or D? Or sorry, A, B, C. Which other block is it? You are drop a comment. Can I come back? Let me see. I will tell you, don't follow the market since. Confirm. This is a liquidity sweep. Confirm. Who is this? I love that. Confirm. I will play that. Okay, my child day. Okay. Now, if you look at it, the ABC, which other block is this why you respect? Which other block is this why you respect? Which other block is this why you respect? Oh yeah, A, B, C, or D. Let's see. A is near to liquidity. This A was active too. Because it's close to a liquidity sweep, and we have a fair value gap. Okay. You are right. Price more likely because for price to go back down, like go down to this level, it go hard to. Price more likely respect A, but we see an impulsive move here that show that smart money is coming here. Can use this here. See an impulsive move here. This thing is tricky. But this one, some buyers are here who want to buy the market. Supporters is not traders, they are here who want to buy the market. So whenever price come back here, they will look out for buy. So price will equally sweep them out. Price might likely expect A or B, but C is very low. Now B, sir, A inside the fair value gap is A or B, but C is very low. B have high probability.